Guys, we're going to use our world-famous stock analyzer tool to help you determine the entry points for these 10 stocks that are awesome and hyped up big time right now. First one, let's go with AMD. So I pull up AMD in our software. I go to right to stock analyzer tool. I'm doing a 10-year analysis on every stock we do. I'm going to pick a really low, a middle one, and a really high revenue growth number, profit margin, all these categories. My goal is to pick low, middle, and high and find the companies that fit my sweet spot. What's my sweet spot? It depends per person. There are so many factors involved, but this will show you how to use this to get entry points in the stocks. So, entry points for revenue growth for AMD. I'm going to go 8, 14, 20% revenue growth. Profit margin, I'm going to go 12, 16, and 20. Free cash flow, same thing. PE, 13, 16, 19. Price of free cash flow, 13, 16, and 19. And I think AMD's got a little bit more, let's go 12.5% return for AMD. Hit the analyze button. Guys, here are the prices that my assumptions here would relate to in terms of price to buy the stock. If you believe the high level, you're buying the stock all day today. If not, you got to wait for quite a bit of drops, $26 to $60. Again, these are the assumptions I just put in right now. If you don't agree with them, put them in your own stock analyzer tool, figure them out from there. Next stock, PayPal. So, PYPL, right in our software. Boom. Go to right the stock. Ooh, look at this company. This is down a lot. Stock analyzer tool. Same as before. Let's go with 5, 10, and 15%. Profit margin of 12, 15, and 18. Free cash flow, I'm going to do the exact same thing. PE, 13, 17, 21. Same with price to free cash flow. And I'm going to do my 12.5% return. Hit the analyze button. Guys, remember, these are my assumptions. If you have different assumptions, put them in yourself. Again, just like the last one, we have a low price of 35, a high of 150, a middle of 75. If you believe the high estimates here, go buy it all day. Remember, guys, but we are very close to the middle level, 74 versus a $78 price today. Remember, I can put this right now on my watch list by hitting the add to checklist. Notify me when it goes below 74. These are my assumptions. They're not to be replicated by you. Go in and use it yourself to determine it for PayPal. Next stock, Best Buy. Guys, look at the stock price. It was $140 just recently. Now it's at $84. Let's go determine that's a buy point now. Remember, Best Buy has done a really great job of competing with Amazon to get people back in the stores buying their products. So, revenue growth. I'm going to go with 2, 5, let's go 2, 4, and 6. Profit margin, I'm going to go with 3, 3.5, and 4. Free cash flow margin, 3.5, 4.25, and 5%. PE, 12, 14, 16. Guys, it's a big company. It's still in retail. I'm not going to give it a huge PE. Let's do a 12.5% return. Analyze button. Boom. Oh boy, look at this. We got a low of 68 to 80, so it's almost at the low mark. A high of 140 to 175, and right in the middle is 99 to 120. So if you believe any of these numbers in the middle and high section, you're a buyer today as long as you do more research. Again, these are my assumption levels. I like it below 68. Hypothetically, notify me. Stay on this page. Next stock, eBay. Look at this chart. High of 81, currently sitting at 46, a low of 44. Stock analyzer tool. So guys, eBay, they sold off PayPal 5 or 6 years ago, spun it off. We just did PayPal. That's why their revenue is down. So I'm not worried about that as much. I'm going to look at eBay. I love eBay. I think it's got a great moat. If you told me to go spend $40 billion creating another eBay, it'd be very difficult. So eBay revenue growth, I'm going to go 3, 6, 9%. Profit margin, I'm going to go 20, 25, and 30. Remember, there was a huge profit margin last year. They probably sold something off, and that's why there's a big jump, which is included in the last 10 years, so I got to go much lower here. Free cash flow margin. Actually, I'm going to focus on that more. I'm going to go back here and edit profit margin. I'm going to go 23, 25, and 27. Free cash flow margin, 23, 25, and 27. PE. Don't ignore this PE. It's based on a huge profit number from selling off something. I'm going to go 13, 16, 19, 13, 16, 19 because of a high moat and a high return on invested capital. And again, 12.5% return, analyze button, boom. Guys, look at this, all green across the board. A low of 47, a high of 105, 70s in the middle. Again, do your own analysis. I haven't done anything here besides put some initial numbers in. This is not the way to buy a stock. But if you like these assumptions, this looks pretty good. Do more research. Next up, Amazon. Guys, Amazon is down big over the last few months. It's down 35, 36%. Really down a lot. A lot of people think it's a buy. I don't know. Let's go look it up. Stock analyzer tool. One thing I want everybody to keep in mind, Amazon makes zero money. Zero from shipping and selling products. They make all their money from AWS as of today. Keep that in mind. So, revenue growth numbers. I'm going to go with 6, 10, and 14%. Actually, 6, 9, and 12%. Profit margin. It's probably going to get better. So I'm going to go 4, 5, and 6%. Free cash flow, I'm going to do the exact same thing because over time, it'll equate out. 13, 16, and 19 on the PE and price of free cash flow. And I'm going to do 12.5%. Hit the analyze button. 22.65 is the current price. Guys, this is just screaming overpriced based on every level. If you think I'm wrong, adjust your numbers for me. Go do more research. A lot of people think I'm wrong. I've been wrong for a long time on Amazon. I thought it was overpriced at 300, and it was the time, but I got the growth numbers very wrong. So on Amazon, come disagree with me in the comments. Go look at it. Next stock. Oracle was a darling stock back in 2000. It could do no wrong. Look at this chart, max chart. It is higher than it was in 2000. It was $45 a share, fell all the way down to $6 or $7 a share. Let's see what it's worth today. Stock analyzer tool. Look at this revenue growth for Oracle over the last 10 years. A measly 1.3% a year. That's with some acquisitions. So I'm going to go 1, 3, and 5% revenue growth. Profit margin. I'm going to do 21, 23, 25%. 21, 23, 25. PE. 12, 14, 16. Guys, it's not a growing company. PE should be reflective of growth. I don't see the growth there. So I'm going to stick the PE low. 12.5% returns. Boom. Guys, a low of 30, a high of 57, 42. You might sit there and say, this is too different. Say 71 to 56. That's a 20% difference. That's it. You've seen how many stocks in the last 3 months have fallen 30, 40, 50, 80%. This is a no-brainer in terms of it could fall immediately to your sweet spot. Just be patient. Run your numbers. If you think there's more potential in Oracle, more power to you, but every investment is the present value of all future cash flow. Next stock, Cisco. Guys, this is one of my darlings, and here's why. Look at the max chart for Cisco. In 2000, this was the internet darling. It hit 80-some dollars a share. Whatever the number is here, it has yet to achieve that price. 22 years later, it has not achieved that price. So when any of these stocks say, it's not going to do that, if I told you after this run up, it would go nowhere for 20 years. In fact, fall 90%, you'd have thought I was crazy, but it happened. But let's go see what we paid for Cisco today. Stock analyzer tool. Okay, very low revenue growth numbers. I'm going to go with 1, 3, and 5. Profit margin, 16, 17, and 18. Free cash flow, 23, 25, and 27. PE, 13, 15, 17. Actually, you know what? I'm going to go with 12, 14, 16, because not a fast growing, not much revenue growth. And that to me is why I'm going to pay a lower PE and a 12.5% return. Analyze button. Yeah, guys, it's still, based on these assumptions, it's still overpriced. Does that make it a buy or not? I don't know. A low of 20 to low to mid 20s, high 20s to mid 30s, and upwards of $50. So it's almost at the highest price here. So again, go run your numbers, determine, are these assumptions reasonable? Are they not reasonable? We don't know. We don't know the future, but we can use the past to help determine something in the future. So for this company, maybe press the pause button, do more research, and determine if my assumptions are correct and if they work for you. Next stock, Microsoft, guys. This is a company that hit a high of 350, a low of 238. It's currently sitting at 263, all within the last year. Look at this chart. Fluctuations happen all the time. I love Microsoft. They generate tons of cash. The question is, do you buy their stock? So, stock analyzer tool. They're growing a lot in the web services business. So let's go with 5, 8, and 11% revenue growth. Profit margin, 25, 27, 20. Let's go 25, 28, 31. Let's go 28, 30, 32. PE, 13, 15, 17, 13, 15, 17, and a 12.5% return, guys. Analyze button, boom. A low of about 100, a high of about 200, in the middle around 130 to 140. Seemed like a big drop. Guys, it can happen very quickly. Let's go a little more extreme here. Let's say, Paul, your PE is ridiculous. 16, 18, 20. 16, 18, 20. Analyze. Still too much. So guys, this is the point. These companies, every investment's the present value of all future cash flow. I cannot stop repeating that. As the company gets bigger and bigger, it's harder to grow and grow and grow. I think 11% revenue growth is a tough number for Microsoft. But I thought that about Apple 10 years ago, so what do I know? But the point is, you use this, put your assumptions in, and it'll tell you what you value the stock at. Next stock, the darling, Apple. Guys, Warren Buffett just started buying a lot of this, and then the price surged, so he stopped buying. Let's look at why he's buying, and let's look at this. So, stock analyzer tool. Guys, one thing before we go to stock analyzer, look at this revenue growth over the last 10 years. Is this sustainable? Is it going to be $1 trillion in revenue in 10 years? We don't know. Let's go to stock analyzer tool. Guys, I'm going very low. I'm going to go 3, 5, and 7% revenue growth. That still doubles their revenue in 10 years. Profit margin, I'm going to do 20, 21.5, and 23. Free cash flow, I'm going to do 23, 24, and 25. PE, 13, 15, 17. Guys, remember, not a lot of growth potential left because it's so big, so you can't give it a big PE, in my opinion. Analyze button at 12.5% desired return. Guys, you might look at me and say I'm crazy. 50 to 60, high of around 100, middle of 70 to 80. So from my perspective, my number is actually higher than this, but it's only because of their high return on invested capital and their buying back of shares. Even though that's not factored into the stock analyzer tool, that's something you need to think about. And maybe you alter your returns and your PE based on that. But right here, based on the stock analyzer, and what I'm putting in here, it's all just math. These are the prices they pay for the stock. So if you want to watch Apple hit 105, add to watch list, notify me. One thing I will say to you guys is, for those of you who think that's not possible, remember, the 52-week high and low on Apple is 182 to 122. That's a big difference in price. So it's easier to fall than it is to go up. Just remember that. Next stock, Google, the internet's best advertising business. 180% of the revenue comes from advertising. That is sarcastic. You know what I'm trying to say here. But look at the stock price. It has plummeted from $3,000 to a low of $21.99. This is incredible. I think, let's see if it's worth it or not. Stock analyzer tool. Revenue growth. There's still a lot of potential there. Let's go 7, 10, and 13. Profit margin. 20, 21.5, 23. Same thing with free cash flow. I am being conservative here. PE. Actually, you know what I'm going to do for profit margin? I'm going to actually do higher on Google. Because the world is becoming bigger and bigger. And it's harder and harder to switch this up. Google's the easiest platform. They've got such a marriage to our lives. 14, 16, 18 PE and a desired return of 12.5%. Analyze button. Yeah, guys, if you believe the high end of these numbers, that's there all day. Low end, it's not far off. In the middle, not far off. We're at a low end of 1,400, a high of 3,000, and in the middle is 2,100. It's not far off from these two. You might sit there and say, oh my God, 1,400, it's so far away. Guys, anything the last few months has taught us is that these numbers can change very, very quickly. Be patient, be ready to buy when the right price hits for you. Use our stock analyzer tool and our community to talk to people about what assumptions you're making to make the best decisions going forward.